All right, let's talk about one of the simplest yet most powerful ways to build wealth: index funds. Today, we're diving into some fantastic insights from investor Mark Tilbury to break down why just letting your money sit on the sidelines can be a huge mistake and how you can actually start your own investing journey.
So, here's the game plan. First, we're going to expose the real cost of doing nothing with your money. Then, we'll get right into index funds and figure out where the heck to even begin. We'll also look at that classic balancing act, chasing high growth versus playing it safe with diversification. After that, we'll cover how to pick the right platform to do all this, and then we'll wrap it up by looking at what comes next. Sound good? Let's get into it.
Okay, first things first. Before we even talk about where you should put your money, we need to understand the financial damage that happens when you just don't, when you let it just sit there.
Let that sink in for a minute. When you don't invest, you're not just missing out on making money. You are actively losing purchasing power. Every single year, inflation is quietly eating away at your savings. This quote from our source, it's the wake-up call. It's really the whole reason we're having this conversation today. It's that important.
Now, a real quick but important heads up. Everything we're talking about today is for educational purposes, drawing from our source's experience. This is not professional financial advice, okay? And it's super important to remember that any and all investments carry some risk.
So if keeping cash is a losing game, what's the move? Well, our source argues that for like 99% of people, the answer is incredibly simple: an index fund. Seriously, forget trying to find that one winning stock, that needle in a haystack. With an index fund, you just buy the whole haystack. It's a pretty brilliant way to get instant diversification without all the headaches.
Okay, so buy the haystack. Sounds great. But which one? There are thousands of funds out there, and it's so easy to get totally overwhelmed and just do nothing. So let's cut through all that noise and get right to the best place for a beginner to start.
Our source points to one fund in particular as the perfect starting point: the Vanguard S&P 500 ETF. So, why this one? It's beautiful in its simplicity. With just one purchase, you instantly become a part owner of 505 of the biggest, most successful companies in America. I mean, we're talking about everyone from the tech giants you use every single day to the healthcare companies literally shaping our future.
And this is where it gets really, really good. Look at that number, 0.07%. That's the annual fee. That's it. To put that in perspective, for every $1,000 you invest, you're paying just 70 cents a year. That's less than a pack of gum. This is so crucial because high fees will absolutely destroy your long-term returns. A fee this low means your money actually gets to stay your money and grow.
But, there's a little secret about the standard S&P 500. It's not as balanced as you might think. It's actually dominated by a handful of giant companies. You know who they are: Apple, Microsoft, Amazon. Their performance pretty much dictates where the whole fund goes. But what if you want a more level playing field? Well, that's where an equal weight S&P 500 comes in. This is a total game changer because it invests the exact same amount in every single company. It basically turns the fund into a real democracy where every company has an equal say.
All right, so you've got your foundation set with a solid, broad market fund. Now it's time to add a little spice, right? This is where we start thinking a bit more strategically. Are you going to target specific industries hoping for explosive growth, or are you going to spread your investments across the globe for a bit more stability? Let's check out both paths.
If you're looking to really kick your portfolio into high gear, thematic funds are where the excitement is. These funds laser focus on industries that could be on the verge of just exploding. And our source believes the next massive wave is artificial intelligence and robotics. He sees it as a shift as big as the internet itself. We're not just talking about slow and steady growth here, we're talking about getting in on the ground floor of a revolution.
And here's the number that has everyone talking. The AI and robotics sector is projected to grow by almost 15% every single year. This is that explosive potential we were just talking about. This is why thematic funds are so tempting. It's the chance to ride a huge wave of innovation and potentially see some pretty incredible results.
But hey, putting all your eggs in one basket, even a really cool high-tech basket, is always risky. And the same thing goes for putting all your money in just one country. That's why our source really hammers home the importance of diversifying around the world.
So why emerging markets? I mean, just look at this. We're talking about places like China, India, Brazil, countries with huge populations and economies that are growing like crazy. A mind-blowing 85% of the entire world's population lives in these developing nations. By investing here, you're not just betting on the US, you're tapping into a global growth engine. If the American economy stumbles, these investments can help cushion the blow. It's all about playing the long game on a global scale.
Okay, so this all sounds great. But practically speaking, where do you actually go to buy these funds? It can feel a little intimidating, but our source has a super simple checklist for picking the right platform.
When you're picking a platform, seriously, don't get lost in all the bells and whistles. Just nail these 3 things. 1, is it regulated? You got to know your money is safe and protected. 2, is it easy to use? The last thing you want is some complicated interface that makes you feel like you need a PhD in finance. And 3, is it cheap? You want zero commission trading, period. You don't want fees eating up your profits. If a platform checks these 3 boxes, you're probably in a good spot.
So we've gone from the steep cost of doing nothing to the simple power of index funds and even to how you can get started. Let's pull this all together for the final, most important takeaway.
So what is the big idea here? What does this all boil down to? It's this. Building wealth is not some secret club for Wall Street geniuses. You do not need to be a stock-picking wizard or a market timing guru. As our source makes crystal clear, a simple, consistent strategy of investing in low-cost index funds is one of the most powerful and proven tools you have for building a solid financial future. It's doable, it's effective, and it's for everybody.
And that brings us to the end of our explainer today. But really, the journey is just beginning. Our source leaves us with this really powerful question to think about. Getting your index fund investing on autopilot is a huge, huge step towards financial freedom. But it's the foundation. It's step 1. So once you have that wealth-building machine humming along in the background, what's next? What other income streams are you going to build? That's a question only you can answer. Thanks for joining me.